In August 2025, Japan abruptly canceled a major trade agreement with the United States, a deal once hailed as a breakthrough. The collapse exposed deep fractures in trust, sending shockwaves through the Indo-Pacific. Japan's top negotiator, Ryosei Akazawa, canceled his trip to Washington, signaling a negotiation gone wrong. The core issue wasn't a last-minute demand, but administrative blunders and conflicting interpretations that Tokyo could no longer ignore. Instead of a signature victory, the failed deal became a cautionary tale about the risks of neglecting a partner's concerns. As the fallout continues, Asia is questioning the reliability of the US as an economic partner. The July 2025 deal between Japan and the United States was designed to address years of mounting trade tensions and uncertainty between the two economic giants. At the heart of the negotiations was a desire to restore stability and predictability to a relationship that had become increasingly strained. The conflict had been sparked by a series of US tariffs imposed on Japanese goods, which sent shockwaves through global markets and threatened to disrupt established supply chains. For Japan, these tariffs were a major blow. The country's export-driven economy relies heavily on access to the American market, especially for cars, electronics, and machinery. Japanese companies faced mounting losses, and workers worried about job security as shipments slowed. In exchange for tariff relief, the United States expected a massive $550 billion investment from Japan, aimed at revitalizing American industries, creating new jobs, and upgrading critical infrastructure across the country. President Trump hailed the agreement as a landmark victory for American workers, promising that the influx of Japanese capital would spark a new era of prosperity and modernize the nation's infrastructure. For Japan, the deal was about more than just economics. It was a strategic move to reaffirm its alliance with the US, secure stable trade routes, and demonstrate its commitment to international cooperation. The agreement was carefully structured to be mutually beneficial. Japan would receive much-needed tariff relief, while the US would benefit from a significant capital infusion and renewed economic momentum. Beyond economics, the deal was also intended to stabilize diplomatic relations, sending a message to the world that the US and Japan remained close partners despite recent tensions. By insulating their security alliance from trade disputes, both nations hoped to ensure that economic disagreements would not spill over into their broader strategic partnership. For a brief moment, optimism was high on both sides of the Pacific. Leaders and citizens alike believed they had found a new path forward, one that balanced economic interests, strengthened alliances, and set the stage for a more stable future. The deal unraveled over a critical error. The US tariff order didn't replace old tariffs, but stacked a new 15% tariff on top of the existing 25%. This would have raised tariffs to 40% or more, devastating Japanese exporters. Japanese officials demanded a correction, especially for the auto industry, but Washington's response was slow. Weeks passed without a fix, eroding trust. US promises to refund excess duties weren't enough for Japan, which saw the delay as a sign of chaos or insincerity. The error became a symbol of American unreliability. What should have been a technical fix turned into a diplomatic crisis. The trade dispute hit Japan at a particularly vulnerable moment, one when the country was already grappling with a host of economic challenges. For years, Japan's export-driven economy had been a pillar of its post-war prosperity, but global headwinds and shifting trade dynamics were beginning to take their toll. The sudden escalation of trade tensions with the United States, a key trading partner, sent shockwaves through government offices and boardrooms alike. Exports had just seen their steepest drop in 4 years, a decline that alarmed both policymakers and business leaders. The numbers told a stark story. Japanese goods, once in high demand, were now piling up at ports, with fewer ships leaving for American shores. This downturn was mainly due to the imposition of US tariffs, which made Japanese products more expensive and less competitive in the American market. The tariffs hit a range of sectors, from steel and machinery to consumer electronics. Major industries like automotive and electronics suffered, with factories slowing production and workers facing reduced hours or even layoffs. The ripple effects extended far beyond the factory floor, impacting suppliers, logistics companies, and local economies dependent on manufacturing. The government was forced to cut its growth forecast, acknowledging that the outlook for the coming year was far less optimistic than previously hoped. Economic reports showed downward revisions, fueling public concern. Economic leaders warned of a looming recession, cautioning that continued uncertainty could push Japan into a prolonged downturn. Financial analysts debated the risks on national television, their somber tone reflecting the gravity of the situation. Many blamed the uncertainty from US trade policy, which left Japanese businesses unable to plan for the future. Headlines captured the anxiety, and executives worried about the long-term impact on their companies. The New Deal was supposed to end this pain, offering hope that stability would return, and trade would resume as normal. Japanese officials hailed the agreement as a step forward, expecting it to restore confidence. But its flawed rollout only deepened anxiety. Confusion over the details and delays in implementation left markets jittery, and business leaders frustrated by the lack of clarity. For Japan, the agreement was an economic necessity, not just a diplomatic gesture. The stakes were high: jobs, growth, and the country's reputation as a reliable trading partner all hung in the balance. Japanese leaders emphasized that this was about securing the nation's future, not merely maintaining good relations with Washington. The U.S. delay in fixing the error was seen as a betrayal, prolonging Japan's economic distress and eroding trust. Many in Tokyo felt that their concerns were being ignored and that promises of swift resolution were empty. As the uncertainty dragged on, Tokyo could not accept vague assurances while its economy suffered. The sense of anxiety lingered, casting a shadow over Japan's economic future. Beyond tariffs, a major rift emerged over the $550 billion investment package. President Trump described the funds as U.S.-controlled, with America keeping 90% of profits. Japan pushed back, clarifying the money was for joint commercially driven projects, not a blank check. The U.S. saw the package as tribute. Japan saw it as partnership. This clash revealed a fundamental gap in understanding and respect. Public contradictions and confusion over the investment terms widened the rift. The disagreement was more than miscommunication, it was a clash of economic philosophies. As disputes deepened, diplomatic channels froze. Japan's leaders demanded sincere, prompt action. The U.S. projected optimism, downplaying the issues. The cancellation of Akazawa's Washington trip marked a turning point. Negotiations stalled, with no new date set. For the deal to survive, the U.S. needed to correct the tariff order and align on investment terms. As of October 2025, no resolution has been reached. The deadlock is a failure of process and trust, with both sides waiting for the other to move. The empty negotiating table now symbolizes a relationship at a crossroads. The collapse of the US-Japan deal is part of a broader shift in Asia. America's closest allies, like Japan, are no longer willing to accept unreliable terms. Other Asian nations are watching, diversifying partnerships, and turning to regional trade blocs like CPTPP and RCEP. The volatility of US trade policy is pushing Asia toward more predictable alternatives. Japan's stand signals that even G7 allies have limits, and smaller nations are following suit. The region is moving toward a multipolar economic order with Asia itself at the center. America's role as the anchor of Asian trade is no longer assured. The failed deal with Japan marks a pivotal turning point for US influence in Asia, signaling a moment when old assumptions about American leadership are being fundamentally challenged. For decades, the United States has been seen as the anchor of economic stability and security in the region, shaping trade rules and setting the pace for growth. But now, that foundation is beginning to crack. America's economic leadership, once a pillar of its power and a source of confidence for its allies, is now in question. The world is watching as uncertainty ripples through financial markets and boardrooms, raising doubts about whether the US can still deliver on its promises. The dispute with Japan exposes a critical weakness. US credibility is eroding at a time when competition with China is intensifying. As China expands its economic reach and influence, the US risks losing ground not just in trade, but in the broader contest for leadership in Asia. Allies and partners across the region are now questioning whether partnership with the US still guarantees economic security. The sense of uncertainty is palpable as leaders weigh their options and consider new alliances that might better serve their interests in a rapidly changing world. Restoring trust will require more than technical fixes or short-term deals. It demands a fundamental shift toward long-term, respectful partnerships. The US must listen to its allies, understand their concerns, and demonstrate a genuine commitment to shared prosperity if it hopes to rebuild its standing. Without meaningful change, the US risks being left behind as Asia charts its own course. New trade routes and agreements are emerging that increasingly bypass American involvement, reflecting a region that is learning to rely on itself and its neighbors. Japan's walkout was an act of self-preservation, not defiance. It was a clear message that even America's closest partners will act in their own best interests when trust is broken and uncertainty prevails. If America doesn't learn from this moment and adapt to the new realities of Asian diplomacy, its voice in the region may soon be drowned out by others who are more willing to listen, collaborate, and lead.